The Capital Markets Authority facilitated the development of a 10-year strategy document with the aid of institutions and agencies that form the steering committee tasked with the creation of the strategic document. These institutions were drawn from the public sector, comprising of the National Treasury, Capital Markets Authority, Central Bank of Kenya, SACCO Societies Regulatory Authority, and the Vision 2030 Delivery Secretariat, and the private sector comprising of Catalyst Principal Partners, Kenya Association of Stockbrokers and Investment Banks, KASIB, Kenya Bankers Association, Fund Managers Association, Standard Bank Group, Nairobi Securities Exchange, Academia, Takaful Insurance of Africa Limited, Green Resources AS, Strathmore University, Feather Connect Limited, and the Central Depository and Settlement Corporation.
The master plan being a very important or key document in achievement of the Vision 2030, whereby the capital market has very specific role in achievement of that of those aspirations of the Vision 2030, namely mobilizing of savings. We are hoping to achieve a savings level of at least 30%, which will translate into the 10% annual growth required, so that by 2030 we can have done enough investments to be able to translate into a middle income economy.
The implementation of the Capital Market Master Plan is driven by the industry's goal to position Kenya through the development of dynamic and liquid capital markets based on international standard financial markets infrastructure. This necessitates a legal and governance framework that inspires confidence and ensures the realization of an open and competitive marketplace. The implementation of the master plan is spearheaded by the authority in close collaboration with industry stakeholders and is expected to transform Kenya into the heart of African capital markets.
When you look at the core vision of the Capital Markets Master Plan, it is to make sure that the Kenyan capital markets emerge as the heart of African capital markets. And in that regard, the Capital Markets Master Plan has set down very clear targets around the role it's going to play in supporting devolution and financing devolution. In that context, we have set down a very clear target that by the year 2023, which is the end of the 10-year period, we expect to see at least 30% of county funding being raised through the capital markets.
There are three pillars that anchor the master plan: supporting developmental and economic transformation, the infrastructure of the markets, and the legal and regulatory environment. The main focus of these pillars is to enhance the capital markets by improving integrity levels and adopting international industry standards. We aspire to position Kenya as the choice market for domestic, regional and international investors by exploiting strengths in sectors such as agriculture, energy, mining, construction, real estate and technology, while leveraging the strengths of Kenya's financial sector to develop innovative products and services, including derivatives, asset management and Islamic finance.
Looking at the spectrum of products that are available within the capital markets, and taking into account some of the market volatility that has been experienced in the space of, for example, interest rate fluctuations, currency fluctuations, the opportunity to develop risk hedging instruments such as derivatives are very timely for Kenya.
We have achieved numerous milestones through the implementation of the master plan, key among them being demutualization and self-listing of the Nairobi Securities Exchange. We have additionally reduced admission fees at the NSE from 250 million shillings to 25 million shillings.
The other milestone that we have achieved, the issue of commodities. There was no clear rule who is regulating this, and so far the CMA has been granted to be the regulator for the spot commodities, which now fits squarely with the introduction of the derivatives market, because it will be problematic to have one regulator for the for the spot commodities and another regulator for the derivatives.
We have seen the issuance of the first real estate investment trust instruments, the first being an income REIT, whereby a pool of existing rental income generating properties can be brought together and be used to form the underlying assets for a unit trust, which can then raise capital from the public for purposes of new or further developments, and use the rental income flows, which are fairly reliable and can be easily projected, to provide an almost fixed income type return to the investors investing in the product.
Additionally, the Capital Markets Authority, in partnership with the World Bank Group and in consultation with industry stakeholders, has introduced a new code of corporate governance practices for issuance of securities to the public. To bolster the overall corporate governance environment, a stewardship code for institutional investors has been developed to ensure that institutional investors take up a proactive role in promoting sound governance in listed companies. Kenya was in addition initially appointed to the board of IOSCO to represent the members of the growth and emerging markets, making up 80% of the members, and was subsequently appointed to the board as the vice chairman of the Africa Middle East Regional Committee of IOSCO. Furthermore, the authority has, in partnership with the Chartered Institute for Securities and Investment, facilitated the introduction of international certification standards in the capital markets industry, covering both international and local regulatory content. The Capital Markets Authority similarly approved the Nairobi Securities Exchange to establish a derivatives exchange in line with the global standards. The Capital Markets Authority has established a derivatives unit to effectively supervise the derivatives market. The derivatives market will improve the development of the capital markets by providing efficient capital allocation, price stabilization, hedging opportunities, cross-border capital flows, and creation of opportunities for portfolio diversification. Vision 2030 flagship projects are increasingly receiving funding through the Capital Markets Initiative of generating finances by upholding international standards of compliance and operational practices. The Capital Markets Authority is therefore playing a pivotal role in the attainment of significant economic growth through the realization of the Vision 2030 goals. The Capital Markets Authority has set up a whistleblower portal on its website to give whistleblowers an opportunity to report malpractices in the capital markets. Through the portal, you can indicate the nature of the malpractice, the place, date and time of its occurrence, information on key suspects, and details of persons who can verify or provide further information. Through the whistleblower portal, you can share anonymous but verifiable evidence to complement the authority's investigation and enforcement efforts. As a whistleblower, you are at liberty to share your contact details or remain anonymous. We assure you that the whistleblower portal is safe and anonymous. To remain silent is to be complacent with the malpractices you see, so do not hesitate to report to the authority. If you see something wrong, anonymously and safely report. To contact us, write to us on corporate@cma.or.ke. Visit our website www.cma.or.ke. Or come to our offices at the Embankment Plaza, 3rd floor, Longonot Road, Nairobi. You can call us on 254-2022-64900. You can also contact us on Twitter @CMA Kenya and on Facebook as CMA Kenya.